Today's lesson is going to be covering a question from one of our members who asked what it is that they should be looking for when dealing with pyramids. They said that they were struggling in understanding what the pyramids actually do. And so today we're going to backtest a little bit and also understand a few principles that apply to pyramid selling or buying. First of all, today's session, we have these two pyramids that produced a substantial pump, and last night's pyramid over here that produced a substantial dump. So how do we actually know when it's a buy signal and when it's a sell signal? So for that, we're going to use a basic framework of manual backtesting where we're going to go back in time and simply observe, take the seat of the observer and recognize what the pyramids do and where do they do it. So I would like to simplify this for you by saying that it's contextual and it's trend agnostic, meaning that it doesn't really know where it's printing. It doesn't know if we're uptrending or if we're downtrending. And so that is going to be key in understanding context. So let's begin from here. So number one thing that you have to remember, please write this down, is that we are going to be looking at a pattern that is going to, it's a well-known method of understanding price action. Or rather, I'm going to do this. I'm going to do a flag, and I'm going to do an inverted flag. So what this is we have trending areas. These are legs, aggressive sells, and then we have consolidations. This is reminiscent of market profile. These musical notes are going to help you understand what it is that I'm talking about. Let's say this is a leg up. Actually, I kind of want to keep my drawings, but I'm going to delete them anyways. So let's say we have a leg up and we print a flag. Now, usually in classical terms, they would tell you that this is a bullish flag. We have a continuation from here. The reality is, if you're at resistance here, and depending what kind of resistance, monthly, weekly, daily, and how thick it is, how significant it is, what happened prior to this resistance being printed, you may see a rejection and a pullback to the impulse area. And usually these reversals are really great things to pay attention to in choppy markets, kind of like what the environment that we're in right now. Okay, let me go back, flag. And then you have another leg that goes down like this and prints a consolidation at the previous impulse point, right? You have seen this time and time again. So the pyramids are going to show up in two places. They're going to be here. They're going to be here. And sometimes they're going to be here in the middle and here in the middle. So the ones that are in the middle are, for example, if one shows up over here, this will be a continuation signal until that consolidation stage. So usually buying these will immediately put you in profit, and selling these will immediately drag price even lower. So if you have a pyramid over here, maybe price will go up a little bit back to its accepted traded area over here, get rejected, and then continue lower. So we need to help you understand this first before we go any further. And so chart vision, as I refer to it, is recognizing geometry based on helper patterns that you design yourselves. So for me, I have these flags. I see price as these flags, and I see price consolidating, creating a trend, consolidating, creating a trend, consolidating, creating a trend, consolidating, creating a trend, consolidating, creating a trend. This is how I see price. And every time, if you use MarketSpy Profiler, for example, you would see that this is simply liquid areas where traders have participated the most. Inside of these consolidations, most contracts have been traded. Even though, paradoxically, during the legs, when you have legs, most volume, again, paradoxically, is here. If you look at the volume bars, insane amount of cash infusion happens during these legs, and there's very little that happens here. And that's interesting because I'll explain why that happens. But if this was the case, if we had consolidations where most trading, the reason we drop out of these consolidations is because the actual liquidity is hidden inside of these thick, big candles. That's where price wants to go to grab liquidity. Now, I don't think in terms of liquidity or supply and demand. I think based on immediate technicals that would psychologically create turbulence within traders. And so, to me, markets are simply emotional. They're not necessarily driven by any other factors. I think there's fear and greed within each consolidation. And once we have these breakouts, I think it's simply one side or the other taking over. And so the more confluence we have inside of these ranges to understand directionality, the more probable the directionality of the signal is going to be in your favor. So pyramids over here, for example, gave us a pump. Pyramid over here gave us a pullback. Pyramid over here gave us a pump. A pyramid over here, remember, continuation gave us a pullback. Pyramid over here gave us a pullback. Pyramids over here gave us a pump into the consolidation. So if you start seeing this as I'm seeing it, maybe like so, you see where we're going with this? Sorry. You can see what price is doing clearly. So first we need to establish that understanding. Understanding beats experience, skill, and knowledge. Now, you can know everything there is to know about the market, but if you don't create understanding in your own mind, and perhaps you can use this, what I'm explaining here, as your starting point and then work from there. Without an understanding, we cannot really act on any one of these signals or confluences. And so that's why we're starting with these drawing lines. To simplify further, I'm going to get rid of trend runner over here. I don't know why that is on. So pyramids are found within the ARmageddon module of the MarketSpy trading system. And now here's how you're going to solidify and know where to take the trade. Leg, consolidation, pyramid, that's a buy. So this immediately answers your question, when do I buy and when do I sell? Now, in order to execute that buy, you have things that I have discussed in the past, such as baseline reclaim, baseline retest, success. A successful retest would simply allow a candle to pop above the orange line right here. So this is an equilibrium zone, and an equilibrium zone is basically a zone of consolidation. Here it is. This was your leg, right? Inverted flag. Are you tracking? So you have a consolidation inside of the equilibrium zone. We have a pattern that I introduced not long ago that you can take advantage, where you can connect 1, 2, 3 points of a candle and track the candle that breaks the lowest point. So I'm just gonna assume that these pyramids, where the signal was right here, this is the candle to break, and this is the white candle that broke it. So you can express it in this manner. This is creating a small indication of a trend. It is the exact same thing as what the baseline is doing here. The trend is holding. And so upon the break of this, your entry is here. Your stop loss is below the baseline or below the longest standing candles or wicks that you can find on the chart. Now, this is a wick on higher time frames. So, for example, if you go to, let's say, 4 hours, not even, maybe 6 hours. Yeah, look at that wick. So this is a wick right here. And so looking at these consolidations in your mind, you know that this is a wick. So this is why I say that you have to put your stop loss either at the wick low or just below the baseline. The idea is that if price breaks below the baseline, then that's a failed retest and we may continue lower. But we do have these pyramids that occur post-dump. So post-dump. Look at the letter over here. Post, right? Dump. And this is where price is trending right now. It goes back to the impulse point. You have your pyramid right here. I'm going to slow down a little bit just so you can understand. And then this is a high probability long setup. I'm not going to discuss the type 1 market enemy and type 2 market enemy strategies here, but I just want you to look at these pyramids in their raw form and understand what is happening here. So House of MarketSpy, right here, confirm the break of the low or the high of the MarketSpy House of MarketSpy candle. Assess your size based on either risking more by putting your stop here or risking less by putting your stop here. And we're not going to talk about exit points, take profit, but I'll just say look for a 1 hour exit at first, maybe 2 hour, it's up to you. And always try to match to see if you're on the 15-minute time frame, your 1 hour trade must equal to 15 minutes of ATR value, the average true range. And so you have a little floating tab, or in the new version it's going to be here, which is going to tell you that 484 is the current ATR. And let's assume that that was the case over here. And upon entering here for thereabout, right? 484, there we go. That's a 5-minute ATR. So this is a, as silly as it sounds, probably the most guaranteed way to say that you're going to get your profitable exit if you're measuring this correctly. There may be resistance blocks that you may consider for your exits that will not allow price to reach its ATR range, or may not give you that 1 hour. So if there's like, if we're trending below an immediate, say, resistance here. And Bitcoin, one thing that you need to know about the asset that you're trading, we have been trading Bitcoin for close to 7 years now here on this channel. But Bitcoin likes to wash these levels, spend some time below it, accumulate, and then go above them. It likes to find resistance, stay above it, and give you a failed breakout, accumulate, and distribute from there. So keep these things in mind because it is going to help you greatly. So hopefully that is clear. House of MarketSpy can help you confirm. Support levels can help you confirm. You can use DSR, for example, to understand where support is. And, hitting resistance right here. Let's switch it over to daily. And this is what I mean. We're at support. We have a bullish daily open, and off we go. So support has been identified. Baseline reclaim identified. Pyramid is now a worthy contender for a directional trade that is going to play in the direction of the probabilities that you have accumulated here, that you have assessed on price chart. And the next thing is we have these pyramids that they typically occur a little closer to the price, but sometimes you have an anomaly like this, confirming with momentum that you have still ways to go and support being around here. It's a strong magnet zone, so short entries, although I would be cautious about taking trades mid consolidation. So once the move has occurred, I'm not looking to immediately, I might add to the position, which I have done yesterday on this short. So if you have your entries to the short somewhere here, this prints, you can add to your position. It'll bring your average down to about here. And you're well below all the EQ zones. And then you go towards your support zone, as we saw on the daily time frame. So post dump, we have a dump. Price starts to move down to the impulse point. Pyramid shows up. Contextually, this is a long signal. And the opposite is true when you have inverted flag. It looks like a B, so let's call it the base. Once it's found the base, and let's say there's support, there's some other confluences here, we have a baseline. Price reclaims the baseline, retests the support of the baseline, and you have pyramids over here. This is a buy signal. And so hopefully that is clear. Let's go back and see that play out again. So some support, obviously, it would not pump mid-air if there was no support. Now, it can overshoot, but it is support nevertheless. So we can confirm this by clicking on DSR. And again, let's bring it to daily just to see where the support is. And here we are. We're at support. This red block is basically support. And we go up. We reclaim the baseline. We have a pyramid. And in your mind, you're saying, hey, this is familiar. This is what CR was talking about. This is an inverted flag. So we have a leg, consolidation, pyramid, reversal, back to the impulse point. We go further back. We see a super aggressive dump over here with the pyramid dragging this thing in a continuation manner towards support. It probably hit resistance over here. We can check that by seeing that it overshot, went into R2 over here. So we have many points of support and resistance to work with. And it got rejected. Price goes down, pyramid. It immediately reverses to the first point of resistance and then goes down from there. Here we did not have a pyramid. We have this pre-order dot, but I'm going to leave that for another video. These dots over here, I'll talk about that. But structurally, it is the same. You have a small candlestick here. You have 3 touches. You have a long wick. So House of MarketSpy in development. Can we break above the the highest point here? And we have a breakout. So We confirm on the breakout candle that this is an entry point, and we take it from there slowly on the rising momentum. House of MarketSpy, support, simple patterns like the double bottom. This is what everybody else sees. They see a double bottom with a equal low over here, so that's usually bullish. Baseline reclaim, retest, and once we have these pyramids that print, we kind of take it from there. Again, this video is focusing strictly on the pyramids. Consider all this. This is a leg up, consolidation, pyramid, going to drag price down. Second tip I'll give you, now that we're done with context, is that, as I said, there are mid-level pyramids that are going to be your continuation signals, and we call them jackrabbits. They're extremely greedy, opportunistic plays over here where we have these pyramids that cause immediate reversals, even here, before actually pulling price down. But in context, you should still treat these as vertical legs, consolidation areas. Pyramids occur here, it's a short. Pyramids occur down at the bottom here, it's a long. Okay, and this can go on indefinitely. Really good for choppy areas. This is a 15-minute time frame, so it's perfect for intraday. Gives you plenty of time to capture at least 400, 500, maybe sometimes 1,000 points worth of movement. The second tip that I'm focusing on here is the number of pyramids. So imagine you have a high probability system like MarketSpy or anything else that prints buy signal. There are points of exhaustion on the chart. And so we have to apply a bit of logic here and say that, okay, let me express this in this way. You know how every time you hit support, and if it doesn't bounce, you break? Well, this idea of support applies to everything. It applies to your RSI, it applies to your moving averages, it applies to your ATR value. So ATR, the nature is like this. For example, big move, 1,000 points, and then it starts to decline. The next ATR after a bit of period is going to be 500, the next ATR. And so if you did not capture this, you're looking to trade 200 points worth of ATR. If you did not capture that, you're looking to trade 100 points of ATR, and so on. So basically, diminishing returns, okay? We can view this chart as Bitcoin's whole history. For example, if I'm zoomed in this area over here, I can say that this is the Genesis block of Bitcoin. Let's just play a game. This is a Genesis block of Bitcoin, and imagine this is a multi-4-year cycle, and then we have a COVID pullback, and then we have continuation, and then we go back to the previous all-time highs, and then we buy from here, and boop, we make a new all-time high, but we fail to go higher. People start buying, we start consolidating, boom, another bear market, consolidate forever for another 5 years, and we start going up. So this is a microcosm of a macrocosm that exists in fractal environments like these. So whenever you're looking at a chart like this, structurally, whether you're trading daily 4 hours or 2 hours or 1 hour or 5 minutes or 1 second, you're going to be looking at the exact same thing relative to the flags, to the pyramids over here. But in each occasion, just like we have 1, 2, 3 count legs where we have a little wedge that forms, and then we post the house of MarketSpy over here, and then we have a higher low over here, and then we have the break of the candle over here, and then this is our entry point. We understand that after the number 3, it is pretty much over, or maybe not, but in your mind, you have to create these rules, these systems. You have to create this cap. 3 strikes and you're out. Classic. Apply that to everything that you do in life. There's no need to keep going, to keep trying. Remember, casino's only edge is that if you step away from the table, you win. Okay, just keep that in mind. Keep that in mind. Meditate on it. If you step away from the table, you get to keep your win. You don't overtrade. You don't overstay your welcome. You come back tomorrow during the NY session. Bitcoin has been responsive to New York sessions particularly because it is now a global asset. Before, it didn't matter. 24 hours, anytime. Now, you have to adjust your schedule to New York because of the bigwigs that are in the game now who have ETFs. It's on CME. It started from when Bitcoin was 20K, when futures were introduced. And so you're able to trade with New York backed by liquidity, and so moves are a bit more sustainable. Asia is great too because it's still a Chinese coin, but we're not going to get into it now. Let's just say that if you have 1 pyramid, 2 pyramid, 3 pyramids, you're not looking to keep buying them forever. After number 3, make it so that in your mind, no matter if price continues to go up or not, you are not looking to be, you become contrarian. You latch yourself onto the reversal. You don't stay with buying forever because it keeps going up. Just make that number your holy number. 3 touches. 1, 2, 3. Then you can go below reversal. Okay. 1, 2, 3. You see that wedge? Reversal. Stick to it. Stick to the number 3 or even 2 sometimes. If you want consistency, I go for 2. I don't even go for 3. 3 is kind of like, let me see if they're going to exhaust. So throughout the day, 3 waves of nonstop up, down, traders get tired. Liquidity comes in with new NY. So start of the day is the Asia session. It's just how it works. This is 100% Asia right here. Started, boom, boom, boom. Exhaustion point, maybe London over here somewhere. New York comes in and they're like, yeah, we're going to bring it back down to this point right here. And so they do. And so 3/2 is your number. After 2 or 3 signals, the same goes for example, these blue dots, for red flags, yellow flags, pyramids, baseline retest. If it retests the baseline more than 3 times, it's not, that baseline is not holding it. There's no bounce from it. Yeah. So keep that in mind. Keep that in mind. This will save your portfolio. This will make you perform a lot better. So we have even Elliott waves. They have 1, 2, 3, 1, 2, 3, 4, 5, right? Yeah. So the wedge is there. Everything is just perfect. You have your consent. It's all the same thing expressed in different ways. I need you to understand that you can acquire chart vision to be able to see all of it just by looking at what Armageddon is showing you here. So pyramid 1, pyramid 2, pyramid 3, you don't want to keep buying these. You bought this one, you bought these. As a matter of fact, 1, 2, 3, and then you don't care about these. Now you're shifting. Now you're seeing a little bit of red. You're like, yeah, man, we're consolidating here. Momentum is just like not. It's right here. This is the point. This is the point where it made a statement. Baseline retest. Bearish signal. Down we go towards support. It has to go towards support. Right there. Range of rails. Your support is there. Clear. So where do we buy the pyramids? Post dump only, or midway through if we have strong momentum, if we're there during the NY session, if we have some context that there's still a magnet zone somewhere around here, that buying this above the daily open, for example, would make us go all the way up to this resistance zone. Here it was, right here. This is a Ranger rail, and we tapped into it, and we never came back to it, and we started dumping. So again, where do we put stop loss? Now, a lot of traders, they talk about risk management. You are MarketSpy. You're very specific. You're not general, like, yeah, risk is important. You're saying, if my entry is on these pyramids, for example, I want to see a break above this orange line. Yeah, so I'm maybe going to wait. If you want to buy specifically right here, the lowest point is here, or the baseline, just slightly below baseline right here. Now, slightly below baseline, you can see how they took that liquidity. They took that stop loss of yours. And so I always advise that traders find the longest wick possible and use that as their measurement. Or, since this is the initial signal, same goes for this signal, they tend to print, not fail, but retest, hold, and then actually play out later. So this is a range trading environment. I actually traded here. I talked about this on Discord. I shared a little template of why I thought this was an interesting breakout pattern here. So this is where you put your stop loss and you calculate your size based on that. Or you can trade without a stop loss. It is up to you, as long as your conviction is strong and you can exit manually. Look at this dump. There's a pyramid here, and we have about 1, 2, 3. Again, we have some sort of situation here with the leg where we have a little bit of buying that can occur here that you can see. So House of MarketSpy finally prints. None of it was available anywhere here. I would argue that even here it was not available because we didn't have a break of this candle. But here on this wick, we have a break. And this is not subjective. This is objective. As soon as we broke above this candle right here, this would have been your entry. Your stop loss would be sitting close to here. And once you're in the money, you can bring it to break even. But these are the pyramids that actually would be the buy signal for us. And it played out beautifully. Again, we have a leg up. Remember the P's. We have a leg up. Consolidation. We have a pyramid over here below baseline. Fading momentum. Back to the impulse point. So we sell. Stop loss at the highest point or just above the baseline right here. And so this is a nice risk to reward ratio. Even here, this is already like 5R right here, just within this window alone, just up to this point, just basically based to the impulse, back to the impulse point. So inverted flags like these, P and B, this is what price is known for. And we go here, we have some pump over here, although it didn't really go up, but we do have pyramids that are pointing up. Now we look at the distance from this to the wick over here, and we're like, that's there's 2 points where we can put a stop loss. 1 point being over here, and 1 point being over here. And so you look at this and you're like, if my entry is here, yeah, and we broke, so there's a house of MarketSpy, we broke above this candle right here, we go up, and you say, okay, well, if my stop loss is here, just at the baseline, at this wick, my 1R exit would be somewhere around here. And the distance that it produced, unlike the others, is quite significant. It exceeds or matches the ATR value right here. And so you would need the equivalent of that ATR value to go from your entry to your stop. And it didn't quite make it right here. Didn't quite make it. So it stopped you out. But within the context of what was happening here, the ATR was actually a lot smaller. It would probably be about 300 points. So this is something that you'll pick up on. This is a profitable trade setup right here. If you were to go long and exit on ATR or the first sign of resistance, which is the blue line over here, this would have been a perfect opportunity to go long. And once again, once we break the baseline, we're now below it. Two of these pyramids are clearly telling us that we want to go lower. So there is no baseline above us to put a stop loss. So the only viable position would be the tallest wick that you can find in the vicinity, which is right here, because price could easily sometimes go up like this, take out this high, but still maintain structure, and down we go. So this is an inverted P, and doesn't mean that we're reversing up. Again, contextually, we're seeing that momentum is fading. We turn DSR on, and we can see that we have the break of support, which is insignificant, volatility driven. It is thin. We're going to talk about DSR soon, but if you have it, you already know how to use it, and you can see that this is not something that you can say is strong support. These thick blocks, doable. These thin ones, price will slice through them like butter. So contextually, you're like, yeah, this is one more leg down. There's no reason for this to go up and on fading momentum. And so we keep going back to the same pattern that repeats over and over again. We have some pyramids that after the dump, again, the leg, I just want you to see how repeatable this is. After the leg down, we have, these have been perfect. Return to impulse, and it's just beautiful. But you have pyramids, a stack of them over there, after the leg up. You have pyramids after the leg down. You have pyramids after the leg down. So you're assuming contextually always up. So to finally answer the question is, yes, after the pump, pyramids are treated as shorts. After the dump, pyramids are treated as longs. Midway, pyramids in the middle of price action. So dump, pyramids. Midway point would be something like this, where it happens in the middle of the developing trend back to the impulse point, and the pyramid would drag price down with it. And it's all contextual. So we have also tricky ranges like these, where we have pyramids that produce a pump. They exceed ATR value by, that's a 1% pump. So these two champions, right? Then you have 1, 2, 3, 4. And if you remember Uncle CR, he said, well, after 3, make 3 your holy number. Start thinking here. Yeah. Do you want to keep buying? No? Well, maybe if you sell it back to where? Identify your support and resistance. Here's a midway point scenario where we have pyramids that are aggressively being bought. You're buying them, huge profit. But then you start seeing things that are maybe like 1, 2, 3 are producing diminishing returns. Every pump becomes smaller than the previous pump. And that's remember, you start with 1,000, that's 1,000 power. And then this 1,000, as we continue to consolidate, keeps dropping. It goes to 500, 300, 400. And so that your ATR gets compressed before the next move. That's the flag in progress. That's the consolidation. That's baking, cooking. So this is probably the best that you can do for yourself to take this understanding home. And these are midpoint trades. And remember, this is a pump. Yeah, these pyramids are bearish because we have a leg that started all the way from here. So we have a leg. So are these bullish? Right? Just zoom out a little bit. How about this? We have a dump, all these pyramids here, very bearish. And then are we actually buying them or we continue selling them? Like we just dumped significantly. Are you going to enter here to sell? Come on. Okay. And then it goes on and on and on. These are the choppy areas where the pyramids are also interesting. If you zoom in, they give you plenty to work with. Now, if you treat them as jackrabbits, however, points like these, if you're zoomed in on the chart, you know the jackrabbit strategy. This is not a video about the strategies. This is just answering where to buy them, where to sell them. Now you apply strategies that's going to filter out a lot of the noise here. Okay, so you wouldn't be necessarily buying this, but keep your count alive. Stick to 3. Look for support. Check out the inversion pattern. Contextually, where are you? Are you here or are you here? Where did the leg occur? Was there a consolidation and a leg down back to the impulse? Or vice versa, the opposite. So, and these guys over here, no strength or momentum, no pattern that we can call as the house of MarketSpy over here. So I'm going to look for one. There's actually one right here. This was the break right here. So if you were to buy anywhere here for a 1 hour trade, you got it. Baseline reclaim. If you were to look for the next house of MarketSpy, somewhere on momentum over here would be maybe this guy over here. Your entry is a little bit of divergence happening here. True. So you hunt for them. You have your pyramids and you're like, I'm going to sell into EQ3. Again, that's ATR, that's 1 hour, this window right here. And price does what it does. It comes back. If you're not quick enough to exit based on what I'm sharing here, then I don't know, perhaps look for another strategy. But this has been really consistent for me, and so I recommend you do it this way. And as we keep going further, there's volatility here. The point is to capture the first pyramid successfully, and don't worry about what happens after. Now, if you limit yourself back to the casino to only one session, whether it's Asian session or New York session, you effectively skip all the noise. Where if you're in the middle of nowhere, in between sessions, it could be a pump, it could be a dump. Why? Wait for a specific time period when you're being backed by money, because money tends to drive price sustainably into one direction or the other. So New York Open, highly recommended for most of you guys, or Asia. Now London is great sometimes too, but you really have to know your market, your time frames, and to me it's either I have clearly divided my chart into 2 separate parts, the sunrise and the sunset, and I recommend you do the same. That is most likely going to be working in your favor because it completely changes how you look at the markets, and you don't have to worry about New York or London or Asia. You're just looking at markets structurally from the start of the day to the end of the day. And when I say markets, I'm specifically referring to Bitcoin in this case. For futures, just stick to New York session. And there you have it. So do we have a leg up? Significant leg up. None of these little ones. These are jackrabbit setups. We're going to make another video and talk about the strategies behind this. But where do you buy the pyramid? After the dump, and you sell it after the pump. So hopefully you enjoyed it. Like this video if it's helped you, if it sharpened you a bit, if you gained some insight here. Implement some of this into your own tactics, your ways of doing things, and I think sharpening the edge together, just exchanging ideas, is what helps this whole thing come together. Thank you for watching, and I'll see you in the next video.